founder and CEO of the Haven Financial Group, with Lance Larson, our CPA, here to talk about some tax changes, some updates, should do's, could do's, all the things related to taxes. And great to have Lance, Kim, with us to talk about this stuff.
Yeah, it's good to have an expert in the room, I have to tell you. That is for certain. Lance, great to have you. Let's get started with this conversation discussing just the fact that tax brackets for 2025, they are changing, correct?
So the tax brackets themselves aren't changing for 2025. It's 2026 is when the new brackets are scheduled to come into effect. So 2025 is the last year of the Tax Cuts and Jobs Act. That's our 10, 12, 22, 24% tax bracket we've been dealing with for the last 7 years. So this is the last year that we're going to be looking at trying to do a whole bunch of different tax savings. In 26, that's when they're scheduled to go back up to 10, 15, 25, and 28%. And then, of course, the higher tax brackets.
Now, that could possibly change, and these brackets could remain in place. But again, that would very much have to do with this week's election.
Yes, that's exactly right there. So we need to have Congress actually do something to extend the Tax Cuts and Jobs Act in order for us to continue to have these lower tax rates. As it stands right now, if Congress doesn't do anything, then we are scheduled to go back up on 1/1/26.
Okay. The IRS has announced, though, some inflation adjustments for 2025, correct?
Yeah. So the tax brackets have gone up a little bit. And so that's the dollar figure that we're looking at there. So for 2025, we're looking for married filing jointly capping out at the 12% tax bracket at around $96,000 or so.
Okay. All right. What other kinds of changes? And again, maybe not necessarily the brackets, but what other kind of changes can people anticipate in 2025?
It's just the biggest thing in 25 is going to be just the dollar amounts are going up for a little bit. But the biggest thing is that this is the last year to really take advantage of those lower tax brackets. So let's
talk about how you do that. Can we talk about that, Lance?
Yeah. So one of the best things that we're looking at, Larry and I were just meeting with a client this morning, is that hey, they're going to have these bigger brackets. So just because of their income, they're able to take out an extra $6,000 tax-free. The client was looking at us like, are you kidding at this? And it was like, this is how the numbers work out. And we keep looking at it. Would you rather have $6,000 tax-free, or would you rather pay 10% on that $6,000? And of course, the answer is no. I'd always rather have it tax-free.
So when your clients are coming in, just walk me through a little bit of what first off, let me start with this. When clients are coming in, and Larry, I know you feel really strongly about this, you're hoping people will sit down with Lance and other members of your team to make sure that they have a tax plan and that they're not just getting their taxes done.
Yeah, before actually, Kim, I'm going to have Lance elaborate on that. When it comes to taxes, the response that we get is we're not getting any tax planning. We hardly even get a meeting with our guy or gal that does our tax preparation. We're more of we drop it off and pick it up and we don't even talk. Well, What I'll tell you is that's not the attention, especially in retirement. The tax discussion, albeit not fun discussions. Although Lance has a lot of fun with these discussions, I will say. He wants to make sure Uncle Sam doesn't get any more than they're due, but they need to be discussed. He mentions our client, Wendy. Single lady, she had no idea. She's working a little bit. She had no idea of her tax situation. And she's like, you mean I can take out X amount of dollars and not pay any taxes? Well, we work hard for every dollar we have. That's why tax efficiency and tax planning, especially in retirement, and that's where Lance loves to explain things. Not that the listeners or their clients have to be the experts, but there's not a better compliment than when I hear, wow, somebody actually explained it to me and took the time, and now I understand it way better than I ever did. That's the compliment we really love to hear.
So let's expound on that, Lance, and talk about, the difference between dropping your taxes off and getting them done and a tax plan. Where would you start with folks?
So I'll give you a great example of a client that came in. They came into some inherited money. So normal thought process was, hey, they have to drain these accounts within 5 years. So they're just saying, all right, we'll just take an even distribution every year. Well, that would be just going in, getting the taxes done. Nobody's telling them how to do anything different. Well, I sat down with them. We actually kind of crunched the numbers and looked at it and said, hey, just because of how the tax structure is that we have the Tax Cuts and Jobs Act, we have these lower tax rates right now in 2024 and 2025. It actually makes a lot more sense from a tax perspective to accelerate those distributions and taking the money out more rather than doing the even distributions. And by doing this, we're actually going to save them over about $30,000 in taxes.
Wow. Yeah, that's real money.
That is real money, money that you worked hard for your whole life. So just understanding these tax breaks, understanding where your income's at, what buckets you should be drawing off of in retirement. Just don't do it randomly, which a lot of people do because they're not really thinking about which account to be taken out of it. It's fourth quarter, and we're having Roth conversion discussions. If you're a required minimum distribution age, make sure that you get that taken out here, and I would say by December 1st. If you inherited an IRA, have you taken your inherited IRA RMD out? Do you need to take some withdrawals here before the end of the year as distributions to maybe pad your savings and buffer your liquidity, or maybe just to fill up that 12% tax bracket? These are the conversations that we need to be doing now, or you should be. And Lance would attest that, January through tax day, he's doing tax preparation. We're doing tax prep here. The rest of the year is the planning stages. It's not just, okay, we're taking the rest of the tax year off. Now's the planning, which leads to successful tax preparation without the surprises. Oh my goodness, we owe it $5,000 again. How about you rectify the situation, fix the problem, so next year it isn't a problem?
Sure. Can you remind everybody, you were talking about withdrawal and distribution. What's the age?
For RMDs, it's right now 73. If you're in 8 years, it's supposed to go to age 75, where all those pre-tax accounts, you'll be forced to take a percentage. It's a divisor out every single year. And if you don't, there's a hefty penalty that nobody should be paying. So that's that timeline, and that has to be done by December 31st. Our deadline in-house here really is December 13th this year, just because anybody that leaves it to the end probably is not going to happen. And also conversions, if they're appropriate, those also need to be done by the end of the year. So again, important timelines here, fourth quarter, but you should be getting the attention and having these conversations. It's as simple as that.
Sure. And Lance, these are conversations that you really should start having prior to retiring, correct?
With some of the questions out there and some of the discussions that we need to have, it is prior to retirement so that we kind of know where your buckets are at. One of the things we kind of talk about is, where is your money? Is it in a Roth account? Is it in 401ks? Is it in IRAs? Are they in non-qualified? Because there's these different types of accounts, all these accounts have different tax strategies related to them. Then also we look forward to, when do you need to turn Social Security on? What type of income do you need to have during retirement? So before you're actually pulling the trigger and saying, yep, I'm retired today, you've already had these conversations, going into retirement with a knowledge that, yep, things are going to be fine. And that's one of the things that we deal for tax here. And then also with Larry, just having with a financial perspective, making sure that we do have the money available for it.
Sure, absolutely. If you're listening right now and you're someone who maybe is dropping off your taxes and then picking them up, and you've questioned whether, this has been in your best interest, let me make a suggestion to you. Pick up the phone and make an appointment with the folks at Haven Financial Group. They will sit down with you. They'll look at your full portfolio, which will include your taxes. And that first conversation is free. You can just come in and sit down, enjoy some coffee, maybe a cookie, and talk about what it is that you're trying to accomplish in your retirement. That number is 612-504-8400, 612-504-8400. You can also go to havenfinancialgroup.com. When we come back, Lance is going to talk to us about some of the biggest mistakes that you can make when it comes to your taxes in retirement, mistakes that may cost you a lot of money. You're listening to the Haven Financial Group Radio Show.